When looking at automotive franchise investments, operators usually have to choose between high-volume, low-margin retail sales or specialized, lower-volume repair shops. For the consumer, when that tire hits a pothole and blows out, it creates an immediate crisis. An unexpected expense of just $400 forces up to a third of U.S. adults into a difficult financial situation. Out of 118 million U.S. households, a full 25% are unbanked or underbanked. These drivers have steady income and own vehicles, but lack the cash or credit to cover high-ticket replacements like new tires. Standard discount retail chains demand full payment upfront. If the customer's credit score is too low or their bank account is too light today, those chains simply turn them away. Consumer demand for essential parts remains constant. The actual market gap exists in the accessibility of the financing. RNR Tire Express is a top-ranked automotive franchise operating nearly 200 locations, designed specifically to solve this financial friction point. RNR operates as a retail finance hybrid. They carry premium inventory on one side, paired with customized weekly, bi-weekly, or monthly lease purchase payment schedules. They require no credit checks and approve everyone, allowing customers to pay off what they need on a timeline that actually fits their budget. Over 85% of RNR customers utilize this specific lease purchase option, rather than buying their tires outright. Relying on this financing mechanism entirely insulates the franchise from competing in traditional discount tire wars. They do not have to fight over the lowest sticker price to win the sale. By eliminating the upfront financial barrier, RNR turns a one-off retail transaction into a captive, recurring relationship with a highly loyal blue-collar and early career market. Solving this consumer friction point at scale requires robust initial capital. Deployment ranges from $610,000 to $1.5 million. We can see how that initial investment performs by looking at this financial scorecard. The high-volume output generates an average unit volume of $1.85 million. Traditional retail cost of goods sold often hovers around 50%, but RNR operates with an exceptionally low cost of goods sold of just 35%. That 15% margin difference cascades down the ledger to generate a robust 14.6% operating income. Because those weekly, bi-weekly, and monthly lease purchase payments arrive continuously, they feed this operating income and stabilize cash flow year-round. These unit-level economics consistently outpace the average profit margins generated by typical quick-service restaurant investments. The higher upfront capital requirement purchases access to a mathematically efficient, high-margin profit engine, insulated from standard retail vulnerabilities. The rent-to-own financial model is physically supported by a comprehensive suite of in-house automotive services. The initial touchpoints start right in the bay, including professional tire installation, wheel balancing, and custom caliper painting. Once the lease is active, routine maintenance requirements like tire rotations and alignments force the customer back into the location on a regular schedule. By offering flat tire repairs and nitrogen services, the franchise remains the single point of contact for anything related to the vehicle's footprint. These layered recurring services increase the overall lifetime value of the customer, well beyond the duration of the initial lease contract. Integrating essential maintenance with flexible financing allows RNR to capture value across the product's entire lifecycle, from the first installation through years of scheduled maintenance. Operating this specific hybrid model requires an investor profile equipped for multi-unit scale. Look at this 3D quadrant matrix. RNR plots securely in the top right quadrant for high scalability and essential need. Accessing it requires strict financial prerequisites, a minimum net worth of $2 million and up to $1 million in liquid cash. These requirements ensure operators have the capitalization necessary for immediate multi-unit development across available prime markets. To support this scale, structural agreements include a 10-year renewable term and a standard 5% royalty fee. For veteran investors, RNR offers an immediate $15,000 discount on the franchise fee. Combining high barriers to entry with an essential service demand creates a defensible, recession-resistant asset class built for serious wealth generators. Matching your specific capital availability with the right multi-unit opportunity requires specialized, strategic guidance. The National Franchise Association is the premier resource for franchisors, advisors, and multi-unit owners looking to build wealth in this sector. You can utilize the NFA to check live territory availability across the 48 available states and review detailed Item 19 financial documentation.
Visit the NFA website today to connect with a certified franchise advisor and begin engineering your portfolio expansion with RNR Tire Express.